Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. Most of the majors moved down against the US dollar once again today, as disappointing data out of Germany and a continuing widening of Spanish yields has caused a decline in risk appetite across the globe. The only currency to actually appreciate against the US dollar was the Japanese yen, which continued its own decline of itself. Heading into tonight's trading, though, we finally have a bit of data that could push the pairs and maybe have a bit of a trend reversal for the major crosses in Asian and European trading. It did just come across the wire that that Apple missed its earnings by a wide margin, and this could put pressure on U.S. markets heading into tomorrow's trading. Let's take a look first at the EURUSD. As you can see, the EURUSD broke down again today, and it broke new lows, and it's setting at the 120.60 level. It seems to be taking it day by day, taking one step lower each day. If the pair breaks below this 120.60, as I've stated before, it looks as though we're on just a slow, steady decline towards the 118.80 level, which has been which is the historic 2-year low in the pair. If it looks as though we're on a path to test that level in the near future, but the first hurdle, of course, would be the 120.60 level. If the cross can firmly move below this level, we could find ourselves pushing down towards that price before the end of the week. But now, if we do get a bounce here and we move back up towards the 121.50, I would anticipate seeing further selling enter the market at that point for another push lower. But if the pair can break above 121.50, and we get a little bit of news or just a positive feel out of equity markets in general, we could see a short squeeze higher and to end the week out, and we could see a push towards the 123 area. The next pair we're going to take a look at is the Great Britain Pound USD. As you can see, the Great Britain Pound has been just basically since its decline after breaking the ascending trend line on Friday and open Sunday, it's declined down towards the 155 level, and it has basically just been sitting at that level over the last week or last 2 trading days. Heading into tonight's trading, now we finally have a bit of market moving news. We have the release of the Great Britain GDP report. The GDP report is supposed to come in negative at negative 0.2%. So this would confirm that the economy is actually contracting in Britain. But if the number deviates from the 0.2 level, we could see a push higher or lower in the pair. If we get actually a positive reading, we could see a push back up towards the 155.80 level over the last 155.80 level, and then even maybe further towards back up towards the 156.75 level. But more than likely, if the pair comes in line at 0.2 or has a negative reading, we could be heading back down for a test of the recent lows of this month. First support would be at 154.60, followed by 154. So heading into tonight's trading with the GDP report, resistance is up at 155.80 and support's down at 154.60. The Oz is the other pair, having Aussie USD cross, is the other pair that has a significant data release tonight. They have the consumer price report. What's interesting about this is that this report only comes out once every quarter, rather than CPI releases in the States that occur every month. So it has a little bit more significant. It is indicated that the cross should come in at 1.3%. The index report should come in at 1.3%. If the number comes in line, we probably would continue our slow, gentle path lower. But if the number for some reason comes in higher or lower than this, we could see a marked move in the pair. As long as the pair is below this pivot, which I'm going to call it at 102.40, which is now going to act as resistance, which used to be past report, I would see the pair moving down towards 101.50 and then ultimately down to 101. But if we see a push above this level following the report, we could see another move back up to 103.20, where we could find another batch of sellers willing to short the pair into that number. Let's take a look at the, I guess, the other three majors really quick. New Zealand USD is in that support zone that we've spoken about the last few days at 0.7860, 17837 from the 0.382 fib. This has been a solid support zone. As you can see, the pair has bounced off it once, twice, three, and we even had a little bounce off it yesterday, but not with much traction, maybe 50 pips. So as long as the pair holds above this level, we could get a pushback higher. Initially, my target would be towards the 79.20, but before I would make any action in this, I would wait for the Australian numbers to be released and see what the risk looks like in Asian trading. The Japanese yen cross has continued its slow, steady decline lower, and it has remained below the trend line. And with the actual increasing of USD yields to all-time record highs, I would expect this pair to continue to push lower, at least towards the 0.78 level. The USDCAD, the last cross we're going to take a look at, as you can see, broke a higher after consolidating for about 30 hours, right at 102. It didn't have a major break, but it's up to 102.18. As long as the pair is above 102, we could get a push towards 102.50. And if we break that level, we could see a rapid ascent towards the 103.50 area. Actually, in tomorrow early New York trading, we have the USD new home sales report, and that is the only major news that's due in North American trading tomorrow. So risk trends are going to dictate price action when that occurs. So everybody, this is Currency Watch. This is Chris Keene from A Point of View. And remember to keep your trades keen and play it safe.